March 27, 1980, Silver Thursday. In a single day, two brothers lost more money than most countries have in their treasury. $1.7 billion evaporated. They weren't criminals. They weren't bankers. They were Texas oil heirs who believed paper money was a lie, so they tried to buy all the silver in the world. This is the story of how ideology, leverage, and hubris nearly punched a hole in the American financial system. But before we dive into this incredible tale of greed and collapse, if you're fascinated by the hidden patterns between wealth, power, and history, hit that subscribe button and turn on notifications. Now let's begin. To understand why two brothers would risk everything on silver, you need to understand the 1970s. Inflation was devouring savings. Nixon had just severed the dollar's last connection to gold. For the first time in American history, paper currency was backed by nothing but trust. And not everyone trusted. Enter the Hunts. H.L. Hunt had built an oil empire so vast that by the 1960s, his son Nelson Bunker Hunt was considered the wealthiest man on earth. But Bunker wasn't your typical billionaire. He drove old Cadillacs, flew coach, spilled food on his tie, and he was convinced the government was destroying America with printing presses. Bunker and his brother Herbert weren't just investors. They were ideologues, members of the John Birch Society, anti-communists who believed fiat currency was a socialist conspiracy. If paper was the disease, silver was the cure. In 1973, the Hunts made their first move. They purchased 35 million ounces of physical silver. Not futures contracts, not paper claims, actual metal. At $6 an ounce, it seemed like a conservative hedge against inflation. But this was just the opening play. 4 years later, the Hunts tested their strategy on soybeans. They contracted to buy 1/3 of the entire U.S. autumn harvest. Regulators noticed. The CFTC found they'd exceeded position limits by 20 million bushels. The fine? $500,000. But they'd made tens of millions on paper. The lesson wasn't don't manipulate markets, it was go bigger. By fall of 1979, the brothers returned to silver with industrial-scale ambition. Each brother accumulated 21 million ounces of physical metal, plus futures contracts for another 65 million combined. But here's what made their strategy devastating. They took delivery. Instead of settling in cash like normal traders, they demanded the actual silver, then flew it to Switzerland. Every ounce they removed from circulation tightened the noose. Industrial users, Kodak, Tiffany, jewelry makers, suddenly couldn't find supply. The price began to climb. $6, then $15, then $25. Short sellers, betting the price would fall, were trapped. They couldn't deliver silver that didn't exist. By the end of 1979, the Hunts controlled over 100 million troy ounces. That's 2/3 of all privately held silver on Earth. And they weren't done buying. As 1980 began, silver entered a parabolic climb. $30, $40, $48. For every dollar the price rose, the Hunts made $100 million on paper. But what they didn't see coming was the trap they'd built for themselves. January 18th, 1980. Silver hit $50.42. On paper, the Hunts were worth $6.6 billion in silver alone. But beneath the triumph, the foundation was rotting. They'd borrowed $5.6 billion to fund the purchase. That's 90% leverage. Then Tiffany & Company took out a full-page ad in the New York Times, calling the Hunts hoarding unconscionable. And on January 7th, the commodity exchange made a stunning move. Silver Rule 7, new position limits, 3 million ounces maximum, no new long contracts. The Hunts, controlling 69% of the entire market, were frozen in place. At their moment of maximum power, they'd lost the ability to move. Here's what the Hunts didn't anticipate. At $50 an ounce, silver became more valuable than sentiment. Families melted down coins. Grandmothers sold heirlooms. Entire trousseaus flooded pawn shops. The artificial shortage reversed. And now the trap closed. Short sellers who'd been desperate to find silver suddenly had supply. So instead of buying back their contracts at a loss, they did something brutal. They delivered the metal. Every delivery meant the Hunts had to pay in cash. Billions of dollars in cash they no longer had. Then the Federal Reserve stepped in, quietly encouraging banks to stop making speculative commodity loans. March 25th, 1980. The Botch Group, one of the Hunts' largest brokers, issued a margin call, $100 million, immediately. The Hunts couldn't pay. For the first time in their lives, the richest family in Texas had run out of money. March 27th, Silver Thursday. Bosch began liquidating. Other brokers panicked. The price collapsed. $50, $40, $30, $20. By the close, silver had fallen to $10.80, a 78% collapse in hours. The CFTC chief warned it threatened to punch a hole in the financial fabric of the United States. Over 20 financial institutions had loaned the Hunts more than $1 billion. If the brothers defaulted, the entire system could seize. A private consortium of banks assembled an emergency rescue. $1.1 billion to prevent catastrophe. The market was saved. The Hunts were destroyed. 8 years later, a New York jury found the Hunts guilty of conspiring to corner the silver market. They were fined $10 million each and banned from commodities trading for life. Bunker Hunt, once the wealthiest man on earth, emerged from bankruptcy with less than $10 million. By 1982, silver had collapsed 90% from its peak. $4.90. Bunker lived another 34 years. He never admitted guilt, never acknowledged manipulation. Until his death in 2014, he maintained they were simply hedging against inflation. The epiphany is this: markets are not built to be owned. They're built to be played. Ideology plus leverage plus artificial scarcity equals collapse. Always. The Hunts believed silver was the antidote to fiat currency. Instead, it became their poison, because in the world of money, history doesn't repeat. It upgrades. Subscribe to the Money Chronicles and uncover the next empire built on borrowed time.